Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo Artisans. Going to be a pretty quick video today because we have the inauguration this week. That makes things a little bit unpredictable. So before we get too far into the charts, let's go ahead and take a look at the new lineup here. We're going to add one more chart to the lineup. We're going to take a look today at Bitcoin, Solana, EUR, USD, GBP, USD, USD, JPY. The new one, GBP, JPY, known as the Beast. That's the new Forex chart. We're also going to look at the SP 500 futures, Dow futures, NASDAQ futures, gold, and silver. Let's go ahead and jump into the economic data that are coming out this week. Okay, so a little data coming out on Monday, which is basically really Tuesday morning for the UK. Claimant count change, some employment data. Tuesday, we've got the Canadian CPI coming out at 8:30 a.m. EST, and then the New Zealand dollar, the New Zealand CPI coming out quarter over quarter at about 4:45 p.m. EST. Wednesday, not a whole lot going on. We got Thursday, the 23rd, and that is the Canadian dollar retail sales data coming out at 8:30 a.m. EST, along with U.S. unemployment claims. And then all day Thursday, this is where the tricky part comes in. We've got the Bank of Japan policy rate. Okay, so this is the second tricky thing of the week. The first tricky thing we're going to cover here in a minute, but the second tricky thing is BOJ. Now, we did see how important the Bank of Japan and the Japanese yen are to the rest of the world financial picture back in August when they decided to hike rates, and they had done it twice in 3 months, which was basically a nationalistic move, surprised the markets and caused a panic. Now we have the election over, we have a lot of important things in the US basically over, and by that day the inauguration will have been done as well. So it may be that if Japan decides to be hawkish, and they have said in the past that they will continue to be so, on Thursday at any time, they don't really tell us when, they might come out with a hike that could do something a little unexpected to markets. It didn't happen last month, might not happen this month. We're going to see. Friday, we've got the euro, a lot of European PMI data, along with the British and US PMI data. This is Purchasing Managers Index. This has to do with company purchasing managers and the types and amounts of things they are buying. It's a key indicator to the overall economy. So the first tricky thing we have to deal with is Monday the 20th. That's inauguration. We don't know exactly how it's going to go. USD is a bank holiday, so it might be that the Forex markets are a little bit slow, but I believe they will be open as of Sunday, which is today, in about an hour and a half as of recording of this video. And that bank holiday plus the inauguration make things extremely unpredictable. So all the charts that we look at today are going to be just a basic idea of where things are going to go, just like we had last week with the FOMC, where I didn't really care to forecast past Wednesday. Whatever forecasts we talk about this week are based on macro data, so the shocks in the low time frame can cause some differences in what this chart is showing. So I wouldn't be trading based on this. This is a general idea of how things would go if everything goes relatively expectedly. Of course, last week's prediction we have here on Bitcoin, we see that I was more or less correct. We would see a move up. This prediction here is right after the CPI, which happened right about here. So on Sunday, I did say the Bitcoin price probably would head up into this range. You see that blue rectangle, and then it would pop up and then continue up. And that's literally what it did. Pretty good prediction for CPI happening that week, and for me not really caring to predict past CPI. And this white line right here is a prediction that I made in the middle of our live session. And that really played out very, very tightly, with the exception of this dive down for liquidity. So those are the last week's predictions. And then what I see happening this week is just a slow grind up, kind of like we've been seeing. You might get a pullback here or there to grab liquidity, but right now everything is bullish. All the algos are bullish, high time frame, and so I do expect a grind upwards. And then if there are any pullbacks, they should be short and sweet. But again, we have the unpredictable nature of the inauguration and the Japanese yen bank statement. So it might pop up sooner than we think, or you might get some pullbacks. But the pop-ups would not be totally unexpected. Pullbacks would be, but then again, if the news came out unexpectedly, then there you have it. Let's look at Solana. Now, Solana is extremely unpredictable, and the best I could do with that is going to be taking a look at higher time frame metrics. So you're going to see me chart this out live, where normally I have these done ahead of time. I'm going to go to take a look at the daily, and we're going to start looking at Fibonacci levels. So a little bit of a primer on Fibonacci, how it works, so on and so forth. Now, the algos are very bullish. This big pump that came happened because of the Trump coin that got dropped. A lot of money went into Solana to go into Trump coin. A lot of profit got taken out of Trump coin and into Solana, and now people are staying into and FOMOing into Solana, taking it to a new all-time high of about 300. Looks like it tapped 295. Sometime today I'd have to go to lower time frames to figure that out. But for the moment, what are the targets, right? Well, you can see that I had 300 as a target because the prior impulse on the Fibonacci is this yellow line right here, this yellow line. And 300 was a 1272 extension target. It did come up there and pretty much tap that target, almost made it to this target that I had drawn and probably will. Probably make it there, who knows, next couple of days. Depends on whether or not it pulls back. Remember, we're in the middle of FOMO now. This is one massive candle. Generally, these things pull back. So far, it has pulled back from 295 all the way down to 275, but it's holding pretty steady. The next target up, if price were to continue, is going to be at about 345. A pullback level, though, if I was to look at a pullback, this Solana prediction is going to be based on a Fibonacci impulse, which goes back from Monday of last week up until just today, and it's assuming that price does not go any higher than this 295. So we're going to overlay the Fibonacci to that. If there is a pullback, and if price does not go any higher than it did, we're looking at a decent level here of about 225. That's a 618 Fibonacci pullback, and there is structure here to protect that. However, things are rather bullish, and we do have to consider topside targets as well. Right now, I would say, just based on this Fibonacci pull here, if price were to make it back down to, say, even this 382, which is 250, which also has some support, if price were to simply pull back very, very quickly to that, we could see it go back up and grab 330 pretty easily. Then we have a lot of Fibonacci confluence up here from the 340 to 380 region, but the immediate target I would have is 330. Now, if we don't get a pullback at all, if it continues to push up, I would expect 350 to be the next target. And that could happen as soon as this week, or it might see just a little bit of a cool off, maybe for a few days, and head up the following week. And again, this is all going to be contingent on none of the inauguration or anything else, or who knows what, bird flu shocks, you name it, that can all mess with markets. But if none of that messes with markets, then we can expect to see Solana go up to 350 in the coming weeks. Okay, EUR/USD, I left the prior predictions as I usually do up, and I started this prediction back before price made it down to this price level, which is 101.76, and that was a target for a short that was on a few weeks ago, and that target was met immediately. I thought it would take several days. It took several hours. Price made its way down to that and bounced back up and created a new range. Well, I did leave a contingency for price to head up. It was on the way down, so this prior prediction was left invalid because it just came true far too quickly. So it wouldn't say it's invalid, but everything after it came true is no longer valid. So we'll leave that up there for now. Taking a look at what I think is going to happen this week, right now, I'm actually kind of flat on the euro. I think it could go either way. High time frame, low time frame. We're starting to see some supports on the higher time frames for a bounce upwards. So I think price is going to currently range until it doesn't, and any of the shocks this week could change that to either side. So I don't have a lot to say on the euro. I would definitely be looking at scalps. If there is a change in everything, I'll address it at that time on the daily show. Now, to look at the GBP USD, that is a bit more bearish overall. Higher time frame is bearish. It does look like the pound is going to fall. However, we might see a bounce up before it does that. The only reason price would break above here is to grab liquidity, and I still think it would head down after it did that. But in the meantime, my main path for the pound is sideways and then down. It could also just break downwards. That's always possible, and I should leave that as a possibility. I have a target down at $1.2032 for the pound dollar. USD JPY broke down as I had predicted. You can see this red prior week's prediction, price heading down, and it went ahead and headed down even further beyond my prediction. I do think that the look is currently bearish, but remember, as this dotted line suggests right here, this yellow dotted line, that is basically around the time that they're going to talk about their bank statement, and this is the USD JPY. So if they got more hawkish with the JPY, if they wanted to hike rates, that would push this down even further. Again, they have hinted that they were going to do that in the past, but they have not done that for the last month or two, so that remains to be seen. Either way, the metrics are a bit bearish. However, it could pull up to grab liquidity as high as 156.93 or even possibly higher, but that's where the prior liquidity is in that 156, 157 area. So I do expect price to go sideways and then start to head down. It might go quickly, it might not go quickly, and if the entire landscape changes, it might do anything. Got to be careful with the inauguration this week. New kid on the block, GBP JPY the beast. This is a very volatile Forex pair. And I told myself last week, and I told the Algo Factor members, that I really do want to pay more attention to it. And as it stands right now, the same metrics and the same sort of considerations apply to the beast with regard to the JPY bank statement. So towards the end of the week, things could really change and go either way. But If things were to remain relatively stable, I would expect GBP, JPY to head down even further, as the pound actually is even a bit more bearish than the dollar, so this should go down a little more quickly than the USD JPY. We'll see how that goes. Now, the stocks seem to be pretty bullish. They did pull back, grab a little liquidity. I think that we might be seeing the Trump pump here as well. I do expect, for the moment, according to algos, unless we see any kind of crazy shock from the inauguration, bird flu, anything like that, even JPY could affect this, but I do expect price to find and reclaim this 6,060 level and go ahead. It might reject here at about 6,100. It might not. It might go above that, but I do expect some upward but relatively calm upward movement in all three of the indices, but that's what it looks like here, and maybe even reclaim the all-time high up at 6150. That's a little bit of a tall order, but it's within the trajectory. It could happen. We'll see how it goes. Dow futures, very similar. We might be seeing a reclamation of a prior high, which was basically 44,600. I do expect price to head up, maybe not as quickly, maybe as quickly, we will see. And again, any of the shocks that we talked about could change this completely. NASDAQ looking very similar, very bullish, could see a reclamation of this 21,800 level, might even go towards the all-time high up here at 22.1. We'll see if it does have the gas for that, but it is relatively bullish. I do expect it to grind higher, maybe some sideways first, and then we'll see what happens towards the end of the week. Gold is pretty calm here. I do expect sideways action, but there is a bullish tint. So if it were to break out of what I think will become a range, and it may not become a range, we may just see it grind higher. Either way, if there were a breakout to the upside that is different to the trajectory we've been seeing, if we see a bit of a harder move, I think it would be upside. Never know, it could pull back, but right now gold on a higher time frame is pretty much range locked between roughly, say, 26.20 and about 27.30. That's where it seems to want to be, but we might see a breakout upside depending on everything that happens. And again, we have all those shocks that I keep mentioning. We have inauguration, we got bird flu, we got JPY towards the end of the week. Silver, similar look to gold. I do see a little support at the current price right now. It does look like price may want to go ahead and head up from its current $30.22 level. Let's just not forget that $32 is a very strong resistance for silver, and despite it possibly reclaiming $30.98, which was a local high, if it does break topside, you might see it run into trouble as it gets into the high $31 region. We're going to see how that goes. Thanks for watching, everybody. If you want to see how these predictions are made, and as you can see, these predictions are pretty accurate. Nobody ever predicts properly every single time. And as you do these week-long predictions, if you're like me and you're just swing trading, you can adapt those. They're just a good framework on which to operate, right? And as these evolve, I can use this data to pull money out of the market. That's literally what my job is to try to predict where prices to go and trade accordingly. We do this really well over at Algo Factory, and we can teach you how to do it, whether you are an experienced trader who needs to clean up their act and get profitable again, or if you're a new trader, you want to see what's going on, come on over, algofactory.tech, learn how to trade like a hedge fund pro, and we will see you next week.